what's up, guys? My name is Lauren Hardy, and I am going to finish our journey of the 4 phases of the real estate market cycle. And we are going to finish off with this last phase in the cycle. Now, I have heard this cycle be called quadrant 4 or stage 4. I've also heard it be called seller's market phase 2. I do have an issue with calling it seller's market phase 2 because in my mind, the way I decipher buyer's market and seller's market is sort of like, who is really winning right now in this point of the phase? Like, at what point, what should I be doing in this phase? Should I be buying? That's the buyer's market. Or should I be selling? That's the seller's market. This is a phase where you should definitely consider selling, but you're not exactly winning being a seller, and you're going to find out why. So keep listening. I'm going to share the characteristics of this phase. I'm going to share how do you invest in this phase. What are the steps you're going to take as an investor when you know we are in this phase? And I'm going to contextualize this for you by sharing how I met this phase in my career. So let's start off with the characteristics. The first is that the days on market start creeping up. Properties are not flying off the shelf like they once were. The number of properties available for sale on the market start increasing as well. But at the beginning of this stage, the prices are still very inflated. And that's because human nature. People are having a hard time recognizing in the moment what really is happening. They are still living off of the past, and they think that it's not going to change. So at this point, people get a little stubborn and they keep their prices where they are. But what they notice is it's taking longer for the homes to sell, and more homes are popping up all over the neighborhood that are available. Now, historically in the construction world, there's a lot of speculation still going on in this phase. There's always those speculative builders that are still gobbling up land, and they are buying, more land and getting more permits to build more properties. But what happens is construction is going to start looking a bit excessive because you have more properties coming on the market right now. Why do we need to build more? Overbuilding becomes a real possibility. And what you are going to see is that sophisticated investors are going to start selling their properties faster and faster because they see what is happening and what's to come. The 2 indicators that we are in this phase is that job growth starts declining in the area. And remember what I said, jobs bring people, people need houses. The next indicator is just excessive supply of available properties. So what do you do in this stage? Well, smart investors are starting to cash out. If not, they cashed out the previous stage to be safe. Smart investors are pulling their money out of this market, and they are taking their money and investing in another area that's more advantageous, because remember, real estate is extremely local. So just because you have one area that's in this stage doesn't mean that everywhere is in this stage. But with this stage does come opportunity, and smart, forward-thinking virtual investors know this. They know that this could be the beginning of prices coming down, but when prices come down, it's a perfect time to buy property because they're going to be deeply discounted. They're going to get them for 40% of maybe what they were worth before. So let me contextualize this for you. This was probably 2007, maybe 2006, 2007 for me. And I was still in college. I was not active as a real estate investor at all. I wasn't really aware of what was going on. My particular market got crushed in Southern California, and that's because we had excessive overbuilding. Our market remained flat from 2008 to 2013, and at that time, that was an amazing time to get some real good bargains. I had heard in that time, you could go to the courthouse steps and simply raise your hand to get a property that was 50% off. Anybody who wanted to be a house flipper could flip a house. They only had to really worry about if property values were going to keep getting lower and lower. But what most smart investors did is they used this opportunity to buy as much property as they could, but they made sure that they had a significant discount. So if property values went down even lower, they were still okay. In fact, I knew an investor, his primary model was house flipping. He would buy a property, say 70% of the ARV, but he would also take off an extra 10%. So really it was 60% of the ARV to account for if the market went down any more while he held the property. At this time, there was so much available distressed inventory that he could actually find those deals. So he was still very, very successful. I also know a lot of people who capitalized on seller financing and subject to creative financing methods that allowed them to buy these properties, hold them as rentals, and they still own them with these financing terms today. So there's a ton of opportunity at this time, but you need to understand the opportunity, be forward thinking, and know how to invest in this opportunity. What's interesting though is there are a lot of areas in the country that even though this was like a global real estate market downturn, there are other markets that were not hit nearly as bad as my local market. So that's back to why I say that real estate is extremely localized, and you need to understand that as a sophisticated virtual investor, you need to understand your local market and all of its nuances. So I hope that I taught you something today. This was taught to me in a presentation when I first got started as a real estate investor, and it really stuck with me, and I attribute that presentation to the reason why I never lost money as a house flipper. I was never a speculative investor. I was always a very educated investor. I understand market cycles, so I don't fear them. I know how to capitalize on them, and I have a virtual model and a virtual mindset. So I know that if a market is in a stage that I don't feel is advantageous for me, I can pick up and move to another market. Now, I want the same thing for you. If you are interested in going virtual, I want to help you. Go to www.virtualinvestingmastery.com and fill out an application today. I hope you guys loved this video. I poured my heart and soul into this one because I feel like it was so important. If you did, please make sure you share with your friends. Thank you so much for listening, and I will see you next time.